Man, Lieutenant Colonel Goose is here. Holy moly. To what do we owe the pleasure? Welcome everybody to the show. We've got all sorts of things happening. All sorts of things happening. And the I just it's a pile. Like we just have more and more stuff every day. We've got policy chaos, really. We've got surprise tariffs last night. We've got surprise regulation and deregulation and surprise rate cuts and surprise stimulus. And I mean, maybe we get rate cuts. Maybe we sue Jerome Powell for whatever reason. I don't know. And it's things are flying at us faster than I think the market can even digest it. And the market's just freezing up, basically. I mean, over the weekend, we got credit card companies, being potentially slapped with a 10% rate cap for 1 year. That was announced late Friday. JP Morgan's CFO said, the banking industry, we're going to push back. We're not just going to let this happen. It's one of the biggest lobbies out there. Financial stocks got crushed so far. I mean, Visa down 4%, MasterCard down 4%, JP Morgan down 3%. And this is price control. It's not free market capitalism. I mean, I'm not even sure you can make it happen without Congress. So that's a whole question. And then, defense companies last week, Trump posting on social media that he's not going to allow dividends and not going to allow defense companies to do buybacks, and defense contractors should not be able to pay their CEOs more than $5 million a year. He wants that money going into production, increasing the production capabilities, not paying out to shareholders if we're going to have government contracts. I mean, I don't know. It's a major policy shift for the defense sector. Lockheed, Raytheon, Northrop Grumman, they're all affected. They've all got these defense contracts. And then another post, a ban on institutional investors from buying single family homes. Large investors have been buying up properties, residential properties, and then turning them into Airbnbs and leases and rent to own and rentals and all this stuff. And banning large investors from owning homes is aimed at improving housing affordability. It's going to hit real estate investment trusts. It's going to hit private equity desks. It's going to hit real estate funds, Blackstone, Invitation Homes. Others are in the crosshairs right now if this gets pushed on through. And then, we saw Microsoft that they're going to have to absorb data center power costs. We're talking about not financing any public power deals. I kind of agree with it a little bit. I mean, Monday evening, Microsoft must ensure that Americans don't pay rising utility rates because of their AI data centers. Microsoft stock took a little hit. I mean, how does that even work, though? How can Trump mandate that? Iran, last night, we saw Iran 25% tariffs on anybody doing business with them. It's basically pointing the finger at China and ramping up geopolitical tension there. I talked about that this morning. We're seeing an attack on Fed Chair Powell, the Department of Justice announcing criminal investigation into Jerome Powell, and Trump calling Powell incompetent or crooked on Tuesday. Massive threats to, I think that was last Tuesday. This is massive threats to Fed independence. If it's actually independent, I think they're probably partisan. I think they've always been partisan, kind of. And, no matter who got appointed, I think they act, it's hard for humans to just put their head in the sand and ignore everything. I think we all have biases. And I don't think that the Fed really acts completely independent just looking at economic data. But, that's neither here nor there. The big question in all this, can these things actually happen? Can they actually be done? And what are going to be the effects of all of this? I mean, the path to all clear here isn't obvious at all, because there's a new regulatory hurdle seemingly 2 or 3 times a day. So we can have volatility. What's the one thing that's going to be the last straw that the market actually cares about, freaks out about? The financial sector getting punched in the face. Of course, they've got earnings this week. We're seeing defense stocks under pressure. We're seeing tech stocks have uncertainty, especially if they've got to 100% finance their own power deals. Real estate sector worried. I mean, nobody out there really knows what's coming next. Do you buy the dip? And Trump even announcing his own form of QE, but is it really QE? Because banks, and I explained this a couple of days ago, that banks underwrite mortgages, right? And then they package those up and sell them to Fannie Mae and Freddie Mac. And then those entities package them up in mortgage-backed securities and then sell them off to the market. They're sitting on like $200 billion of profits right now. They're government-owned entities sitting on $200 billion of profits. So Trump was instructing those entities to go out to the market and buy $200 billion of the mortgage-backed securities. I mean, traditionally, when the Fed does this kind of quantitative easing, they buy the mortgage-backed securities from investment entities that had invested in mortgage-backed securities. But if Freddie Mac and Fannie Mae are the ones creating the mortgage-backed securities, and they're the ones instructed to buy the mortgage-backed securities, does that even make sense? Is that really does it solve any problem at all? I'm really confused about the mechanism there. So all sorts of craziness, right? All sorts of craziness. Is any of it even possible? Is it going to happen? Maybe in some form or another. One thing's about, everybody freaked out about tariffs, and then the real tariff situation completely, relatively completely different than the actual initial first blush. So, the first blush on everything seems to be the knee-jerk reaction. Then we kind of sort it out. And tomorrow, we're supposed to get the tariff decision. Are they even legal? So that's Supreme Court's supposed to publish that tomorrow. They punted last Friday when they were supposed to publish it last Friday. We'll see if they actually are going to do it or not. I don't have a crystal ball. I can't tell you for sure. I just pay attention to the potential threats. So if you're a day trader and a short-term trader and you don't want to experience volatility and chaos, well, maybe be careful in the morning. So we'll see if that, see what happens. See what happens. And then, so that's all the policy chaos. I mean, it's just stacked higher and deeper, 2 or 3 items a day, it seems like, lately. And the market just having trouble digesting it all, really. And then, on top of all of that, we've got PPI and retail sales coming up hot here. And we had CPI today, tomorrow, PPI and retail sales. And then we get, on Thursday, we get the unemployment claims. So this kind of stacked up right here. Kind of stacked up. And then Friday, we've got a benign day for once. Lots of stuff, lots of potential. And I guess we're going to see where this all kind of takes us. Up, down, sideways, I'm not sure. As far as QE goes, I mean, maybe it increases liquidity in the system. We're certainly seeing Japan's stock market take off. An indication of global liquidity. Seeing that popping right up into the highs. If that can continue, we should see other things taking off. Bitcoin coming up today, back to the high we've seen, the same kind of prices we've seen for a while here. Saw some headlines, 94,000 is the first time since November, but that's not entirely true. We touched it here, and we're touching it here. So, that's not an entirely true headline either. So here we are. Can we break out? Can this stick today? Or are we going to do like we've done 1, 2, 3, 4 times in the last 2 months and reject this back down? Not so sure. I know that we have clear resistance right up here. And then we have the 618 right up here at 106,000. 106K. And that's from the October high to the November low down here. So October high to the November low. If we come up and test that 106,000 and bounce down off of it, we're probably going to get a whole nother consolidation. Could take another couple months. You think about it, we've already been consolidating for pretty much all of October, all of November, all of December, and we're almost halfway through January already. Craziness. 3.5 months already. If we're in crypto winter, then it's likely that we spend upwards of 10 to 12 months consolidating before we make a bottom. And it could be even longer before we get back out to a new high. That's basically what we did back here. We made this high, and we spent the next 12 months hunting for this low down here. I don't know. All right, all I got is the price action. Right now, it looks like we've done kind of an initial move, and we're working on something right here like this. That's what it looks like to me. All right, we made this initial move down, and now we're doing this kind of consolidation. So a break lower can put us down into more consolidation. That's what it looks like. Do I really want that? No, but I have to deal with the chart I'm given. It's very overlapping. This is not bullish type of price action right here. Lots of three-wave moves. And if it breaks down, even though we're pushing up and we just spiked another $1,000, good job, everybody buying. But if this rejects, we could definitely see it breaking back down lower lows down in here. 75,000 could be a near-term bottom for a little while. So that's what we're dealing with. I know there's lots of bullish catalysts, people buying treasuries, this, that, the other, but you got to watch out. Got to watch out. It's already giving it back too. We popped that 96. Now we're giving it right back. So flowing as I speak. Chaos. Chaos, chaos. Today on ES, tried to break higher, got to the 1272, tagged it, and did a retrace. 1, 2, 3. Is that done? Or are we opening the door for bigger downside? Overnight price action may give us a clue. Stick around in the morning. I'll try to check it out. Right now, downtrend highs. We're going to have to get through that to go higher. If we were to pull down and make another lower low overnight, that could be an indication we see some continuation. NASDAQ, same situation here. We spiked up and rejected off. A little bit of chaos during the day. Initial move down, initial retrace, and initial, just kind of stayed in the range. But this is starting to look a little bit bearish. Right there, top star process. This makes how many attempts to break through that? That was 1, 2, 3, 4, 5, 6, 7, 8, 9. It's like nine attempts to push through. Still haven't done it. Opens the door for the bigger downside. Daily roadmap line down here around 24,250. Further downside down in here. If we get that move down, this move up, and this move down, could push us down in this 22 to 23,000 area on NASDAQ. This is NASDAQ futures. It runs a couple hundred points above NASDAQ cash index. You're like, but what about QQQ? Just kind of divide by 41.11 and you'll get the rough QQQ price. This one rejected too. Kind of stayed in the range we identified this morning with the gamma exposure. we were talking about, looked like it was kind of capped out up here around 28, and it looked like it had support down here at 624, and that's kind of the range we stayed in. Closed almost right down the middle. Kind of funny how that works. Kind of funny. On that 30-minute chart, we got that pullback. We shot up here, hit the target, had a pullback, came up, a little bit of chaos, and closed the day right there on the 618. Just chopping around. You know, I guess it was more of a 30-minute or 15-minute bounce. And we drew that fib line in here this morning. Tagged it, pulled back, came up, tagged it again, pulled back, and just kind of quit the day right there. Inside candle. Russell spiked up, reached for the sky, tried to hit that breakout. Still looks like we want to reach up and grab that 2740 target right up there. Been talking about that for a few weeks now. After this pullback we did, nice three-wave pullback that wrapped up that first kind of trading day, or I guess last trading day in December, first trading day in January, and we've started a rip. It may need to rest for a couple days here. That's been a heck of a move. 8 days up and then rest and then pop on up there, and that may be the top. RSP topped out today. RSP came up, hit the, I had an alert sitting just under that 1618 right there. Tagged that today. We could reach on up to 199.57, but this is due for a pullback too, and this is the equal weighted S&P 500. When you equal weight all the 500 companies, so it's kind of like SPY, but instead of placing a lot of weight on the big tech companies, they're all equal weighted out, and this might be nearing a top here, so caution on that. I use it as kind of a market dashboard indicator. Excuse me. So that's kind of the big broad brush there. I guess for the next 45 minutes or so, we'll do requests. The rules of the request go: 1 request per person per request. Let a couple other people go. If anybody starts dominating, we had somebody kind of abusing it a little bit last week. A couple complaints coming through. Please be kind to your fellow members. You can always wait till the 6 o'clock. Ask me anything. I'll set the timer here. Well, I'll have to set there's not a 45 minute, so I'll have to wait a minute. But at 6 o'clock, we'll switch over to a Ask Me Anything for channel members. If you're not a channel member, well, consider being a channel member if that's something you want to do. If you want to get in on the Ask Me Anything. Otherwise, yeah, capital letters. If you got a question, please use complete sentences. Don't use this, that, these, those, thing. Be descriptive. Be, you know, if you want to thank me for anything, let me know. And that's the rules of the game. So I'll hit as many as I can. And before we go to the private members only Ask Me Anything stream at 6 o'clock, if there's any left over, I'll finish those up after we switch over. All right. So I'll just do high time frame daily analysis basically on every stock, and we'll see where we get to. Now, like we're breaking on down. First move down, retrace, and next move down could put us down to 120 for now. Something like that. Just do them on this chart. Just the drawings, yeah. So we've failed the breakouts and reaching on down, so. Yeah. 120. That's what it looks like. And RKT. Target's 23. Here's the high, here's the low, here was the entry back here in November, and there's the target right there, one at 23.70. GM. Next target up is 86. And then watch out for a retrace. That one just marched right on up there. Kicked off the entry all the way back here in May of 24. And now here we are staring down the target at 86. MKR. That one's hit the target. Next target up, it would be 61. And EXAS. This has got to be some sort of buyout, right? Because it's just parked. Yeah, M&A. Looks like there's a M&A thing going on, mergers, acquisitions. Yeah, so there's some sort of buyout thing going on. So that makes it not really tradable. It's just drifting up into the buyout price, whatever that might be. $105. So as the deal firms up, it'll drift to 105 and not going to go higher than that. So that's your limit on EXAS. Not really tradable. Now, if the deal falls apart, watch out below. AVGO. I'm still looking for the roadmap line. Maybe that was close enough. Close enough. You call it. I don't know. Looks like first move down, possibly a retrace to a 618, and then another move down. So that would look like here's the high, here's the low. 618 resistance at 375. You can believe that this works or believe that it doesn't work. It really doesn't matter to me much, but works for me. I get it right more often than I get it wrong. And I don't have any money trading on this. I would wait for this to find the bottom. Now, if we fill the gap up here, we fill that gap, get above that gap down, there's the target, 428. So this is all resistance right here, all the way up to the top of the gap. And it can still turn down off of that. Maybe make a little higher low, but lower low than that low right back there is what I would expect right now. This is starting out with 1, 2, 3. So we may see a little bit of upside and then push down more on AVGO. Snow, looking for this to bounce, but didn't do it today. Got the first move down, the retrace, and we're in the bounce zone. But let's see, 204 and then 190 below that is the support. So which one can we bounce on? Excuse me. Golly. Got this wheezing gravel stuff. It just keeps on going. Can't seem to shake it. Makes me really tired too. So that's snow. I have one share and one share only. A firm. This company stands to benefit from the credit card chaos, but looks like with the rejection, the financial industry saying we're going to fight it tooth and nail. Here's the retrace. Buy now, pay laters are what would be the stopgap. If credit cards get capped, they're just not gonna accept credit cards from lower income people. They may cancel lower income credit cards. Less trustworthy people. And then what are you left with to fill the gap? Buy now, pay later. That gives the potential to go here, but it also ups the risk on buy now, pay later. So if we can get above the 618 zone, right around this 87 area, right here, 86.11. Get a daily close above that. We set up the target 106.75 right there. That would be the target Amazon. Where have you been? This is set for 265. This set up the entry last week. 24 trades, 95% of the time it will make this move from the 618 to the 1.1448. 265 is the target. Profit factor 36. It's pretty darn spicy. How long could it take? 7 months. Could take longer. 7 months would be in the 99th percentile. 99th percentile would be 7 months. The average would be 45 candles. Well, that's about 2 months. Grab the 45 candles will be right there. So that'd be middle of March. About 2 months, February, March. How is 45 days? 2 months. It's because the candle maker isn't open on the weekend. So that actually is 67 days, calendar days, when you do 45 candles. That's the average, but if you had 3 standard deviations, it takes you up to 7 months. And that'd be in the 99 percentile. So average, 50% of the time you run out of time, 50% of the time you don't. So be careful out there. CPRT, Copart. Well, that's just getting punched in the face. So timing on that, yeah, about the time that the first brands fell apart. I'm just seeing that erode down. There's the low, here's the high. Look for this to hold in the 618 zone. If we can hold here and bounce, should be able to have it upside. Look for the break above the 618 there and the roadmap line. If it gets down below this, may find support down here around 30, but more likely we're going to push down lower in the 20s. Maybe retest this bottom. That's Copart, not exactly super bullish at the moment. T-Mobile keeps on trying to find the bottom. Golly. So there's a lot of SpaceX hype. You know, this is the way you could get exposure on SpaceX. And then they launched the trial. And in July, they started selling SpaceX access, Starlink, on the phones. And we've just been pulling back. Somewhere down around 175. Looks like it might be the bottom for now. If not, could go down to 150. And it could take the entire move, the entire pop back. Could have been a bubble. Chop a little bit, break down, come back down. Bubble pattern right there. You can see how that looks kind of similar. Chop a little bit and come back. So be careful on T-Mobile. Looks like that hasn't bounced, hadn't found any support so far. Still working on grinding down. Those supports right in here, and then maybe right down here. We'll see which one holds so far. Hadn't been able to do anything bullish at all. Just down, 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 down. SLV. Watch out. That is straight up exponential. Crazy can keep being crazier. Spot price on silver hit 100 yesterday. That would be the next fib line up. The more straight up we go, the worse the correction is going to be. If you're in AGQ, the 2x leverage on silver, a 50% pullback here. You know, this is coming from 80 back down to 40. Can make AGQ 100% loss. That can go bust on a move like that. So be careful. Bloom Energy. 163 is the target. There's the bounce. 163 target activated back here on the 8th. Chugging on up. I'm just grabbing the... So RCAT. And here's the high, here's the low. I love it when I skip the chat. 19 would be the upside. Right there. RCAT, Airlab. Fingers work. There's the high. There's the potential low. Resistance right here at 201. We can get a daily close above that. 287 would be the upside. For Airlab. UVIX is not one I can really chart. That's dumpster fire, probably going to 0. Probably going to liquidation. I wouldn't bet on it doing anything at 5. That's just not very likely. MDLZ, Moldelez. Hunting for that low. Yeah. So that whole move looks like the first movement. Looks like an ABC. ABC. First move down. Retrace into resistance. And we're working on the next move down. Probably going to put us down in the 40s is what that looks like at this point. This looks like a bigger ABC. And that started to look like a C with the, you know, this looked like a C also. Bounce, and then could be complete anywhere below this A, but it would be more ideal if we hit this zone down in here. So probably has more downside to go before we, you know, at least another $10 potential. FBTC already covered Bitcoin. It's not really anything to, it's just a multiplier. So BTC1 exclamation point divided by FBTC. Here's your multiplier. $1,150. Right there's your multiplier. So take FBTC times 1150. There you go. Same chart as Bitcoin. Here's your resistance up here around that 106 area. If you're like, wait, I don't. BTC USD, go with all-time history, and divide by 1150. Here's your FBTC numbers. Here's your high, here's your low, 93 resistance. If we turn on off of that, we got downside to go. It looks like if this is the bigger first move down, retrace, second move down, we could be looking at a low down in the 50s for FBTC. There you go. Goldman Sachs topping out. Watch out. Probably due for a retrace of some sort. Could spike 1157, but probably due for a retrace. See how FAS is doing. Amazingly, this hasn't gone anywhere. Interesting. FAZ keeps piling into the bottom. Goldman Sachs is just elevated. There's no pullbacks to project anything off of. And like I said, 1157, maybe 1300. Be the next upside there. Netflix still hunting for the lows. I cover this every morning. It's on the list. All the Mag 7s get covered every single day. So if you've been missing out on what you think is going to happen here, looking for it to come into this low right here, where we kind of bottomed once, twice, 3 times, 4 times. That's what I'm kind of expecting, because we just can't seem to find any firm bottom here. So it looks like we want to come back down to this consolidation. Now it's possible that we hold just a little bit higher, maybe. But right down in that bottom is where I kind of expect it to find some support. Maybe able to bounce, but so far, I mean, if we can get back up out of this and back through this consolidation we did right over here in December, resistance would be up here at the roadmap line, somewhere around 100 right now. But till we get that, still have downside pressure. What it looks like on Netflix. ALB continues to march higher, pushing through that through that 618. So setting up the potential to come on up to 437. 437 right up here. Now, with that big rip off the low, watch out for a sizable retrace at some point. Could happen from up here. Probably going to do some sort of big consolidation at some point. Maybe from the shoulder here. We'll see, but right now, you got nothing but time. 437, maybe even up here, 600 to 800. That's been my long-term target up there. So, yep. That's ALB for you. Let's see. I just skipped the chat. See lots of repeats. Yeah, you guys can rewind and catch up. AZO. Watch out for another move down. Resistance up here at 3,700. Don't know that found a bottom yet. It's looking kind of like 5 down, unfortunately. This might be entering into a bigger downside potential. We've got 1, 2, 3, 4, 5. A little bit of overlap, though, is the problem. So at this point, watch for resistance at the roadmap line and at that prior high. If we pop up in there, this rips right back up in here and then turns back down. This could be indicating that was the first move down, the retrace, and the next move down would be the ABC style. We'll put the right there. Put the downside potential somewhere down here on AutoZone. It's odd after being so bullish for so long, but could, after marching that much higher, it could enter into a prolonged correction. TTD, trade desk. Yep, still downside. That's same pattern, kind of. A, B, C. Looking for that to finish up down here around 28. Possibly as low as 20. In the 20s, basically. AVGO covered. WBD. So, do they get the buyouts? Or do we reject the deal and this actually goes on the bigger picture move that we have set up here? If we do the buyout deal, that's probably the price. If we get continuation, that's what we could be looking at. If we do the buyout, this will probably draw back down pretty violently. So this is a buyout encumbered deal, and I probably wouldn't. I'd probably stay away from a buyout deal until it mergered or acquisition or whatever is going to happen. So Netflix has a deal. You can see there's a couple deals on the table. Paramount keeps offering to buy the whole thing. Netflix keeps reporting, or this Netflix deal keeps circling around that they want to buy Warner Brothers assets off of the Warner Brothers assets off of Warner Brothers Discovery. Make it just back to Discovery, and I guess the collection of channels that they've amassed, HGTV and cooking and whatever else, Food Network. So I guess we'll see what happens. I probably wouldn't touch it. It has a big picture pattern, but mergers and acquisitions are one of those things that kind of stops the chart pattern. Did SoFi. I expect a bigger retrace off of this. We could just consolidate here for a while. Back to basically right in the all-time high. We did poke slightly higher right here, but we're having a lot of trouble getting through this. I had drawn this on here a while back that I expected kind of a retrace in here before we took the next breakout move. So far we've done everything I drew on the way up here, and now expecting that pullback before we can go higher. Could just sit here for a while and build up energy before we go again. I would be careful counting on it to do anything though. Stretch thin right here. B and C. And messy chart. Yeah, it's already played out. And so resistance right there. On a path to potential right there. Timeline on that, it could take, that's the climb rate, so could take like the 2030s before we get up there. When this thing was kind of trending. Yeah, I'd be careful on that one. It's not really a trend. It's kind of just a sideways chop for a year. Basically, since we're just hanging out just north of the IPO price. 25 years later. Looks like a nasty chart. I wouldn't bet on that doing much of anything. CSIQ. Target for 5 is up here somewhere. Kind of depends on the 4. If 4 bottomed right here, then 5 should be able to get up to about where I had it, right there, right in that 37 to 46 area. There's the target. And then we may retrace back to here and then embark on the next move higher. So short term, that's what I'm looking for. On CSIQ shell. And went lower low after kicking off the, man, a bummer, man. Holy. I stopped it out. And look at this to get a close above these highs right here. If we can get a go above that, set up for upside in here. I don't know if I'd touch it. That's a lot of chop. It's my personal preference. I don't like choppy stuff necessarily. QCOM failed to break out. Right back to the roadmap line. Yeah, this rejection right here was pretty clear that the market does not intend for this to get out of here. Grinding, and it may take a bigger spill before it can get some energy to get out of here. Right now, this does not look like we're going to let this thing get out of this consolidation. Sideways, more sideways for now. That's just probably not going to move. ELBD. There's the high, here's the low. If we can hold on to that low, which it may have a little more downside to go. If we can hold on to that low, turn back above that 618, 64 would be the upside resistance, and 66 above that. NG. 12, I guess, the next upside in there. Nova Gold. And on Simi. So that's on a path to get to 65 is the target. Not very big upside, possibly 66 above that. And then another retrace. Flex. Got an alert. Go ahead and turn on the countdown. Members only stream. Just a reminder, members only stream starts in 15 minutes. We'll switch, and it'll switch everybody over automatically. You don't have to do anything if you're a channel member. If you're not a channel member, consider subscribing or being a channel member. Not subscribing, but hitting the channel member button, little dollar symbol. It's like $5. Support me in the channel and my effort to keep doing this. So, cake. And just ask me anything. So, ask me anything about trading you want. I'm not going to tell you how to trade and make money or what you should do with the position. Can't give individualized trading advice, but short of that, I can show you whatever that I'm doing. 7507. Right there. Cake. Got above, but it has failed to break out of the top of this box for years. Be a little bit careful. Kind of been consolidating in here for a long time. So real test will be, can it get above that 70, 66 to 70 area? If it can, 75, 78, maybe some bigger numbers, but gosh. Had a really hard time for a long time. It basically has no trend. Like, this is not a trend at all. So be careful. Bravo Victor Sierra. No trend there at all. So just expect that to just keep sitting there. More of that. Estee Lauder has a big potential upside. Talking about a move up into the $1,000 area. Big move up, big retrace, held here. Watch it to break out of the weekly roadmap line, which is right in the vicinity there, at about 120. Get above that. We set this path up for somewhere around 2,000 probably, long term. Now that could take well into the 2030s, maybe even 2040s. So shorter term, target 501. So meet some resistance right there at 175. And then once we're above that, 500. Yeah, big numbers. That was a big correction. Big corrections lead to big expansions. So we may see that pull back from there and then climb like that. There you go. That's Estee Lauder for you. Boeing, same kind of thing. Big pullbacks, kick off bigger upside. They just delivered more planes than Airbus for the first time in a long time. Since like 2018, I think, back here. So here we go. That's what it kind of looks like for the upside. Struggle around this 300 area for a little while. Maybe get as high as 500 and then retrace back, trying to break higher. But that's kind of the rough plan I kind of outlined for Boeing right there. So short term up into the 300s possibly. 300, 350. Celsius. That one also has a long-term big upside potential. 220. Bouncing off the roadmap line here. Probably shoot it back to all-time high around 100. Retrace again, and then shoot it on up. It may meet some resistance at 126 and 150 on the way to 220. LVS. Roadmap line support. Hit the target here. Pulled back. Hit the target. Retracing. Looking for that to hit the roadmap line right there. Down around that 60, 59, 60 area. BRT. Bounced off the roadmap line. Has not gotten the close above that 180 fib line right there. Sloppy. And zoom it up here to try to see the number. Yeah, 180.05. Need that close above that. Now, this candle was not a close above. That was a gap up and a close below. So we need the close above to kick off that target right up there. 212. And that's VRT. Costco may have finally made the bottom. It very enthusiastically bounced off the target. Moved back up to the 983 area. Kicks off the target up here at 1100. I drew it on here before, and it looks like it's doing it. So 1120, 1150, that'd be the target. It's not actually a trade till we get above 983, but you can front run it. Could have front run it down here. Front ran it. Costco for you. CVR. What is this thing? It's a nasty chart, whatever it is. Golly. I don't know what hole you pulled this out of, but wow. Yikes. I'm not even sure it's done yet. Maybe. That is a long-term correction. Holy man. Wow. Yeah, I don't have much to say about this. I wouldn't touch it. Wow. I mean, maybe it turns into something, but that looks pretty bad right there. That chart looks pretty rough. Hard to salvage. There's no trend. I mean, it's not done anything since it IPO'd in the 60s. No 5-wave structure, no just corrective structure after corrective structure. That's just nasty. Nasty price action. Good luck. That's what I got to say about that. AKAM. I wouldn't touch that. I mean, maybe somebody's pet play, but CVR looks nasty chart wise. If that's the bottom, which maybe that was the bottom. Then we got to break back above this consolidation to get 141 up here on AKAM, Akame, EHM. Pult Group, whatever. There was the big bottom. Here's the top. Entry was back here. Didn't break down. So if it breaks out above this high, we're probably going on up to there. This was probably a weekly chart bounce. Yep. This was a weekly chart. So bounced here, activated here, all the way back in August. Target's up here. 45 weeks on average to get there. 99 percentile would be 3 years to get there. That's PHM for you. GGL. Gagal. It activated the bounce to 65, but that's still lower highs and still a correction and still has potential that this whole thing is first move down, retrace, next move down. I'm not sure if I like that or not. The lack of enthusiasm to get broken out to the target here has me concerned that we may roll over right there. So 65 when we get going, stop $1 below the low, and gap fill may lead to lower prices on GGAL. And reminder, in 3 minutes, 4 minutes, we're gonna switch over to members only stream. Just throwing that out there. Philip Morse. We get back above the 618. And now we did have a gap down, so that gap down is going to be resistance all the way to the top of the gap. Up there. But technically, if it closes above the 618, kicks off the entry for 191. But we may have resistance. It may cause consolidation before we can pop on up there. Could just rip. It could just gap above the gap down. That's entirely possible. CTRI. And broke above the downtrend highs. There's the lowest low. First move up, retrace. See what we got cooking here. Yeah, nothing meaningful off of that. And there was the high. Here was the low. We're struggling at the 618. So prior high. Mark that in here. That'll be resistance. Just always is. So watch for a negative reaction off of that. We're kind of grinding in that area right now where it popped on the IPO and then ground in there and then plummeted out. So we're grinding there. That can easily kick off a retrace before we pop on through. So that's going to be the major resistance on that one probably. That is the resistance right there. Next up, Riley. This B. Riley Holdings. I've got a few thousand shares of this. These guys buy distressed assets. You know, think like Joann's going out of business or Bed Bath & Beyond. You know, they buy distressed assets and then try to turn it into profit. Can be lucrative, but they got caught with their hand in the cookie jar here in 22, 23, 24. Insiders bought the holy fudge out of this thing. They backed up the truck and loaded up. They did not expect this to go bust. So it's possible this is the one of the turnaround stories here. If they can pull this thing out of the ashes. But not great so far. Yeah, so far not great. Almost went bust before. Low. I mean, it has some crazy potential here. Absolute crazy potential. Got the all-time high back here. Yeah. Short term, I don't know. I mean, got resistance up here at the $16 area where the gap fill is. I would expect a lot of trouble getting through there. And then trouble getting through that prior high right there before we get to this high. But it has the looks like we're going to rise the phoenix from the ashes here. Like I said, I do hold several thousand shares of this. 11, 14, 21. That's what it looks like.